Thank you, Clarissa. Thanks for being here, everyone. It's been a great conference so far, and I love being here in Austin. I did my undergrad at UT, so it's always good to be back in my favorite city in the world, especially to talk about Bitcoin. So like Clarissa was saying, my name is Rachel. I'm a contributor for Forbes and the co-host of the Bad Crypto podcast. I'm based in San Francisco, and I will now let our wonderful panelists introduce themselves.
My name is Robert Long. I'm a partner at Bell Nunley in Dallas. I previously worked at the SEC for over 10 years, was a federal prosecutor, and worked at FINRA as well. So these days, basically, I defend regulatory cases, white-collar cases, and advise on compliance and regulatory issues.
Hi, everyone. My name is Brandon Buchanan. I'm the co-founder and managing partner of Iterative Capital. You guys may have seen my partner Chris Dannon earlier speaking. If he told you we run sort of a OTC desk, large-scale cryptocurrency mining operation, 3 investment funds. I act as sort of operational partner and general counsel across those entities. I guess relevant to this conversation, I started my career as a securities litigation attorney at WilmerHale. Also spent some time at Gunderson Detmer doing venture fund formation and venture capital law. And after that, I was the COO and general counsel of a fund called Metamorphic Ventures.
Wonderful. Great. So this is the legal fireside chat, and I think the first question that we should start off with is who are the regulators in the space, and the definitions of what they do and all that. So.
Sure. So there are a lot of regulators in the space. It's kind of an alphabet soup, so to speak. You've got the Securities and Exchange Commission, which has jurisdiction over securities. So to the extent a cryptocurrency is deemed a security, and maybe we'll kind of talk about this later, but if it is a security, then the SEC would have jurisdiction. The CFTC also has jurisdiction in the space. The CFTC regulates commodities, and in particular, derivatives, options, and futures based on commodities. And they have a 2-tier regulatory system in place. So if it involves a derivative, an option, or a future on a commodity, then they're going to have full-blown regulatory oversight. If it's just a straight commodity, then they will have jurisdiction for fraud and manipulation in transactions involving interstate commerce. FinCEN is also in the space, and they would regulate money services businesses like money transmitters to the extent that a business exchanges cryptocurrencies for fiat or cryptocurrencies for other cryptocurrencies. They would likely have to be registered as a money services business, and FinCEN would have jurisdiction. The state regulatory authorities are also in place. So in each state, you'll see, they oversee securities and banking and financial institutions, so they can have a role. And then OFAC as well would be another player, and they're just kind of getting into the space, I would say, kind of recently. And in particular, they prohibit transactions with certain blocked individuals and entities. So to the extent you've got a digital wallet address, for example, you cannot transact with anybody that's on a kind of a blocked persons list. As of right now, those digital wallet addresses are not listed by OFAC, but that's something that I think they're contemplating and may happen in the near future. The last, I guess, regulator in the mix, and this is really more law enforcement, but it would be DOJ and all the other criminal investigative agencies that would have jurisdiction in the event that there's any criminal law violations.
Yeah, I think that's pretty thorough.
Yeah, agreed. So let's kind of talk about the main legal challenges facing the blockchain and crypto space right now. So in my mind, we're kind of seeing, ICOs disappear and STOs and security token offerings taking over. So maybe could you guys define, what a utility token is versus a security token, and where you see ICOs going in the future, and like the legal questions around that?
It's evolved over the last year. Our second vehicle was a specific ICO fund where we led the storage offering led the token offering for a company called Storage. And at the time, I guess what a lot of folks describe as the Wild Wild West, which hate that vernacular for it, but it really was like that, right? Everyone was spinning out a token. No one was even contemplating registering with the SEC or doing any sort of filings. And it created a lot of complexities. You had unregistered broker-dealers who were out there selling coins on the secondary market. They were getting these huge discounts. And in addition to that, you had sort of retail investors who were getting fleeced. I mean, they were buying into products that weren't even going to come to market. So, I guess what I've seen is that the ICO market is declining primarily because the SEC enforcement is starting to come down a little bit harder. And so, when I look at the distinction between a utility token and a securities token, I mean, personally, I don't really see so much there, right? I think investors are investing, for some sort of appreciation and gain, which, if you look at what a security is, it passes the Howey test, which is a three-pronged test to determine if it's a security. So I don't know if that gets to your answer, but yeah, I don't know.
Yeah, no, I think that's right on, and I'll just kind of echo that. In July of 2017, the SEC issued the Dow investigative report, and that basically put the community on notice that these token offerings, coin offerings, may be securities, and they identified the Supreme Court case that he referenced, which was SEC v. Howey, as laying out the test for whether or not a security is involved. So from that point forward, I would say, and that was kind of a warning shot, because that was not the SEC taking enforcement action, that was the SEC issuing an investigative report. So they could have taken enforcement action, but they chose not to make sure the community was aware, hey, look, we think these may be securities, these are securities, and you need to comply with the federal securities laws. So after that point in time, the SEC really ramped up its enforcement efforts. I would say to the extent that if you had a securities offering that involved an oil and gas interest, a bond, a note, or something like that, they may not have pursued it. But if it was cryptocurrency related, when you had the same dollar amounts raised, for example, they would go after it. So point in fact, you had the Recoin case. And in the Recoin case, the guy raised, I believe, about $200,000. And one of the false statements alleged by the SEC was that he actually claimed to have raised like $2 million. So this was a relatively small case, and nevertheless, the SEC went after hard, and that person's also being criminally prosecuted as well. Now, if that were a oil and gas case, a note case, I'm not sure that would have been pursued by the criminal authorities or even the SEC for that matter. So I think the SEC has really put kind of the community on notice through the investigative report, through its enforcement actions, and as a result, you're really not seeing as many ICOs, initial coin offerings, without those issuers having to go through the analysis of figuring out, hey, is this a security? And I think that's why we're starting to see a movement into basically securities offerings that just happen to be tokens or cryptocurrencies. And as far as kind of this question with respect to utility tokens, look, some of these tokens are going to have utility, and the SEC is going to look at those, and there's an SEC case out there involving Munchie, and these tokens issued by Munchie were supposed to have some utility. I think you could get discounts at restaurants and things like that, and you were going to vote on, restaurants or different types of businesses, and as a result, your reward essentially was going to be some kind of a utility token. The SEC came in and said, hey, look, actually those are securities. And as a result of that, they issued a cease and desist order against Munchie, and they basically unwound that particular securities offering. One of the interesting things in there is that Munchie actually had claimed apparently that they did an analysis and determined that their tokens were not securities under the SEC's analysis. But nevertheless, the SEC deemed otherwise.
Right. So, I mean, for people who still are doing ICOs, because there are still ICOs out there, what are the legal questions to really consider when, thinking about doing an ICO now in America?
Well, I mean, I always advise people, which, sort of informally, is that you should really treat it as a security, right? So we kind of have a hard and fast rule for companies that we're going to invest in. We don't invest in any token that we can't mine. So our lawyers have kind of deemed that sort of a gray area where if you can mine it, then it's probabilistic that the SEC won't deem that a security. I think actually, we saw a movement where companies were doing SAFE agreements or SAFT agreements. They tried to evolve and do a different sort of instrument to skirt around those laws, but I think the SEC has gotten smart on that. And so what we're seeing now, I think, are more sort of airdrops and things of that nature in terms of token offerings. That's my take.
Yeah, I think with any ICO going forward in the United States, there's going to need to be a determination about whether or not it's a security, an analysis under the Howey test to walk through and find out, is there an investment of money in a common enterprise with the expectation of profit to be derived from the efforts of others, and that's really that Howey test. So I think they're going to have to walk through that analysis and make a determination. And if it is a security, then they're going to have to comply with the federal securities laws.
Right, and in terms of like trends that we're seeing now, besides for the security token offerings, we're also seeing more institutional investors getting involved in the crypto market, and a lot of that has to do with like custodial solutions. What are your takes on that from a legal perspective? Custodial solutions versus non-custodial solutions, and
Yeah, I guess I have a harder stance on sort of custodial stuff. I think any fund that is in crypto should be custodying their own assets. I don't think they should be outsourcing that to a group like Coinbase or Gemini or what have you. I do think for hedge fund players and other folks like that who want to be in the space, I can see why why Coinbase or something like that would be attractive, right? But you need that. You need to have a regulated or certified custodian to be able to custody assets for some of these large hedge funds, whether it's BlackRock or whoever. So that's a different analysis.
Yeah, I think that's an important development in the space. For a long time, financial institutions, registered investment advisors, they were not able to, basically make investments into crypto because of custodial issues. Under the federal securities laws, institutions that do that type of work are required to have those assets or securities basically at a qualified custodian. So to the extent you're starting to see that develop, I think it's definitely a fantastic development, and it'll be a good development for the space because it allows these institutions to make those investments when in the past they were not able to.
right. And I'm curious to know, what legal questions are you really seeing more often now? People come to you for legal advice, and what kind of questions are these people asking?
I can tell you the kind of questions that we ask lawyers. It's like, there's no real sort of thing as like a crypto lawyer, right? This asset class, everyone's sort of retrofitting laws that already exist to the crypto space. And so the same sort of issues that you would have, in regular business, you're going to encounter in crypto. And so whether it's fraud and you're dealing with that, whether it's securities questions if you're going to do an offering, whether you're a fund, for us, most of our work spent with the OTC desk is dealing with compliance and KYC laws and things of that nature. So, the space is evolving so fast that you really do have to have counsel sort of on call all the time. That's both domestically and abroad.
Yeah, it's very difficult when you've got cases from 1946, for example, that SEC v. Howey that involved an orange grove in Florida, and that analysis is being applied to these new digital assets. So, it's a basic question, but it's still a very common question that comes up is, hey, look, are these securities? How do we do a compliant offering? Do we have to comply with the federal securities laws? Other areas of inquiry are, look, we want to do a business where we basically, do exchange type work, and now that raises questions of FinCEN regulation. Again, depending on the product involved, is it a security, is it not a security? If it is a security, then it's got to be a licensed registered securities exchange or an alternative trading system. If it's not, let's say maybe like a Bitcoin or Ethereum or something that's been determined, or at least there's been guidance out there from the SEC that says those are not securities in their kind of true basic form. There you still have money services business issues, FinCEN issues. So those are kind of the areas that I see a lot of questions. A lot of kind of entrepreneurial people that have great ideas that want to figure out the right way to go about developing those business ideas. But I would say in addition to that, I also defend a lot of people that run into problems with the regulators.
Right, and in terms of problems? Could you kind of elaborate on that, just out of curiosity?
These would be folks that, didn't maybe pay attention to the SEC, or there are questions about whether or not something's a security. The SEC may be taking a position that something needed to be registered. Issues with respect to disclosures and statements that are made in white papers that are publicly available. Obviously, all those things, it's very important as you get kind of a business going that you want to make sure you do it right, from the beginning, because that stuff can come back to haunt you. So as an example, in connection with that Dow investigative report, one of the things the SEC built that case on, and there's a variety of different factors, but they talked about one of the individuals, one of the developers of that particular token was out at some conference and talked about how, it would have basically provide the purchasers something like a dividend. It was like a dividend is what the guy said. Well, of course, that shows up in the SEC's analysis. It shows up in the investigative report. So everything from the white paper to communications with potential purchasers or investors need to be very carefully scripted and made sure that they are accurate and that there aren't any false or misleading statements in there, because those things are the things that can trigger, SEC review. They've got a lot of cases out there. There's a lot of ICO issuers. There's a lot of white papers. There's a lot of ideas, and the SEC's got limited resources. So, they're going to be looking for those low-hanging fruit. They're going to be looking for the ones that are the most problematic. They're going to be looking for the ones that somebody called and complained about or sent a tip in. So, having your, basically your I's dotted and your T's crossed are very important.
Right. In terms of the SEC's involvement now, I mean, what do you think that means for the market in the future? Because, the involvement has really increased.
Well, as a participant in the market, I welcome it. He sort of alluded to it, but there's been so many ICOs, there's so many new companies popping up. There are actually already established companies that just try to connect blockchain or cryptocurrency to their underlying stock to get a boost. You have all these different things that are happening that I think it takes away from sort of the beauty of what's actually been happening in the space and a lot of the innovation that happens. So the SEC, they've developed their own internal branch that's focused on crypto. I think that's been net positive. They did issue a lot of subpoenas to different funds, to different ICO companies, to different blockchain companies. I'm not sure if we know what the results of that have been, although I do know a couple funds have decided to fold. But I think it's been great to sort of get the bad actors out of the market.
Yeah, so I think the SEC is obviously on patrol. We know that they're bringing cases, but they've done that, but they've also established that kind of that branch, that group in Washington D.C. to kind of facilitate, answering some of these questions, to work with people that are, interested in developing some kind of business in the space. That basically, if they have questions. Now, how valuable that ultimately proves to be is kind of difficult to say, but I think it's definitely it's a good sign. It's an indication that they, are interested in the space. They're not trying to totally demolish it, that, they want to have some people out there to answer questions, to give guidance. And so I do think that is it's a positive development. But things have kind of changed a little bit. I mean, this was a space before when you had, kind of the white paper by Satoshi Nakamoto was kind of uncharted territory. And, it was open to everybody, open to the masses to kind of participate. And now we're kind of moving into more of a highly regulated space where you've got to deal with, SEC regulations, FinCEN regulations. There's startup costs now. Depending on what you do, you got to comply with Reg D or you got to comply with Reg A+. We can only maybe offer it to accredited investors. So times have, to some extent, changed.
Right. And I mean, I think, you look at other countries like Malta, for instance, and, you see that ICOs there and the space there is really advancing, and ICOs seem very much alive there versus what we're seeing now in America. I mean, in terms of, from a legal perspective, why does it seem like America is moving slower than, countries like Malta, for instance? Is it because,
Yeah, I just think because America is going to be, or is sort of the gold standard in terms of the regulations that get passed. So, where we fall on things is usually where the rest of the world will follow. And I think that's why. But when you look at sort of these small municipalities or small governments and countries, they look at this as an opportunity to boost their economy, right? Like if you're in Zug or in Switzerland, or if you're in Malta or wherever, and you can attract crypto companies that are generating hundreds of millions, potentially billions of dollars, that just means more revenue for you tax-wise. That's how I look at it.
Yeah, and I view America as kind of like an aircraft carrier. You know, it's big, it doesn't turn around on a dime, but it's steady. And so I think that's kind of what we're seeing here with respect to the regulation. I mean, even with these kind of security issues, again, they go back to a 1946 Supreme Court case. You know, I see that there's potential here. You know, they're obviously interested in the space. You know, the SEC's got a special group. The CFTC's got kind of a special group looking at these issues. So we'll just kind of have to see what plays out over time. I would say, you know, if kind of looking into the future as far as, you know, maybe kind of regulations being changed, my guess would be it would be in the exchange space. The sense I get is that, you know, the heads of the SEC and the CFTC don't like the fact that, you know, cryptocurrencies are traded on platforms that aren't regulated the same as the futures markets or the securities markets, in particular with an eye towards manipulation and those types of things. So that's where I would foresee if there's going to be some kind of regulatory involvement or changes or passage of laws, it would be basically with the regulation of the exchanges.
Right, and I mean, like, how do you think that, you know, will bridge that gap with, you know, the exchanges and...
Oh, well, I think, you know, look, the exchanges are obviously, you know, these are savvy companies and interested in growing. So I think as of right now, for example, you probably have exchanges that are proactively going out there looking at whether or not they can become registered as a securities exchange, registered as an alternative trading system. So to the extent that they have that ability, those resources, they can get that nailed down, that's going to open up a lot of business to them. So I think that would be something that will, you know, maybe sort itself out as time goes on.
Yeah, it's a unique space because I think most of the transaction volume that happens doesn't happen on exchanges. I mean, whether it's OTC desk or whether it's peer-to-peer, and I think that's another reason why the government has sort of been slow to step in with some of its regulatory stuff. So whether that's you know, decentralized exchanges that are popping up, whether that's OTC desks that are sort of controlling a lot of the volume, whether it's sort of overseas players, I think they're just taking sort of a wait-and-see approach.
Right. I mean, which exchanges are more regulated than others?
I'm sorry, say that again?
Like Coinbase, for instance, would you say, in terms of regulations, I mean, you know, which ones seem more legitimate than others, in your opinion, just from a legal perspective?
Yeah, I don't want to co-sign anyone in particular, but but I think you know what the Winklevoss twins have done with Gemini from start to finish has been a pretty good model. I think they've been you know, very open to being sort of whether self-regulated or regulated, whether it's by, you know, the New York BIT license, whether that's by the SEC, by whomever. They've been very upfront with that. I think Coinbase as well. Both of those exchanges, I think, submitted to having to file whatever tax report that is, that they, like, if you're a purchaser on those exchanges, you've got a tax form. So I think that shows that they're compliant at a very minimum level.
Yeah, I think, you know, with respect to any kind of U.S.-based exchange, I mean, they're going to have to be kind of licensed as a money services business. So there's going to be a definite step up, I would say, maybe compared to the foreign exchanges, which are just going to have a higher degree of risk, but certainly there's risk with any exchange.
Right. And in terms of, you know, the future of this space, what legal questions do you think that we're going to start seeing more of as we progress?
I mean, so one of the big issues that that we're sort of evaluating now is, you know, as you see different financial products come to market, one of the ones that we think has a lot of potential is cryptocurrency lending, right? So if you're holding crypto and you want to be long, you know, what do you do with that? You know, what's the potential there to lend it and still earn some capital on that? But it's different because it's not a currency. We don't know if it's a security. And then, you know, I think for IRS purposes, they're treating it as property. So, you know, if you send a Bitcoin and you get one back, or if you get some residual back or some interest back, you're not getting the same pulling back, right? So it's like thinking about cost basis, thinking about really what it is. That's sort of the stuff that I'm looking at. Or it's like I said, it's innovating all the time, so it's hard to say, but that's what we're looking at, sort of new products that are coming to market.
I think there's going to be a ton of legal questions. I mean, even as some of these get answered, more questions are going to pop up because of the innovation. You know, we've got a lot of regulators in the space as it is, SEC, CFTC, FinCEN, DOJ, the states, OFAC. You know, so we've got a lot of separate rules, regulations in play, and I think you're going to see, just as kind of the technology develops and it gets brought into, like you were talking about, kind of the lending space. Well, now, okay, we're going to have all these cryptocurrency-related issues, but now we're going to have to deal with kind of the lending-related issues and those laws. So I think it's really going to be, you know, very interesting and probably somewhat of a bumpy ride, just because it's been a little bit bumpy. But I think that'll probably continue to be the case because of the innovation and the fact that we're going to probably be looking at applying some of these older laws and regulations that applied to totally different types of products to these new digital assets.
Right. And I mean, can you kind of give an example of, you know, older laws that are now applying to these assets? Like,
so I think if we looked at basically right now with the regulations that are out there, there have been, as far as I know, maybe with a couple of very limited exceptions, you know, no new significant kind of regulations or laws that have come into play specific to cryptocurrency. I mean, there's been some guidance from the IRS, I think, in the kind of cryptocurrency space with dealing like the Venezuelan petro and stuff. There might be an executive order on that. So there's been like a few little things out there. But for the most part, this is all the regulation, or just about all the regulation out there, is really taking these old rules and regulations like the, you know, SEC v. Howey case from 1946 and applying that to this new technology. So even that, it's not just limited to the SEC v. Howey case, because, you know, there's been case law ever since then that's kind of put a finer point on, you know, what that Howey test involves. So, well, is it an investment of money? Okay, well, there's been other cases that say it doesn't have to actually be money as in US dollars. It can be, you know, Bitcoin, it can be actually, you know, services that you contribute. So there's, I think, just a lot of historical rules, regulations, and case law that are basically kind of getting dusted off, and you're looking at, you know, kind of cryptocurrency and putting it through the lens of these older cases and rules and regulations to figure out, do they apply? If so, what does it mean? And then presumably probably trying to figure out, okay, if they do, what do I need to do? If they don't, how can I be sure that they don't?
right. And so, I mean, I think it's really important to point out that, you know, the role that white papers play. And in terms of a legal perspective, I mean, you know, what kind of questions are you getting around white papers, and how are they so important in the space from a legal perspective?
Well, I guess from an investor's perspective, man, it sort of spans the full gamut, right? I mean, some of it just seems like outright fraud in terms of like whether it's the advisors that they have, sort of the profits that they tout, you know, how the crypto economics are even done and how the tokens are split out. I mean, it got to the point we don't even do ICOs or token offerings anymore, and that's as of like mid last year. So I haven't even looked at a new white paper, to be honest with you, for a token offering.
You know, these white papers basically, you know, for the most part have to be viewed like they're a private placement memorandum, they're a registration statement, they're a document that is out there in the public domain, and, you know, the regulators are going to pull those up. That's probably going to be one of the first things they do if they get a tip or they get a complaint or they stumble across it, or, you know, somehow it gets on their attention because some article shows up in the media or whatever the case may be. So it's an important document, and it's something that, again, from the beginning, you want to make sure that that document is going to be comprehensive, include what needs to be included, and it certainly is, you know, truthful and accurate and doesn't, contain any false or misleading information.
Right. In terms of regulators, with, you know, there are so many now, who would you say, you know, is kind of the main regulator, and why?
I think it's predominantly the SEC, although, you know, if I had to put a ratio on it, it's probably SEC 40%, CFTC 35%, and then probably spread out among the others that you mentioned, FinCEN, maybe FINRA's involved to some degree, and local municipalities.
Yeah, I think that sounds about right. The SEC's been very active in the space. It's a bigger federal agency than the CFTC, but interestingly enough, that jurisdictional kind of component that I talked to you guys earlier about with respect to the CFTC, where they've got jurisdiction over all commodity transactions in interstate commerce if they involve fraud and manipulation. So the CFTC actually has probably the biggest play, I would say, in the space, but they're also probably the smallest of these agencies. Maybe they're on par with FinCEN, but they're definitely smaller than the SEC. So I wouldn't be surprised to see more activity from the CFTC, and who knows, maybe the agency will continue to grow as well because of its jurisdiction in that space.
Right. So, thinking about which cryptocurrencies to invest in, what legal questions arise when considering that?
I think you should use the same heuristic that you would use as a seed stage investor or any sort of venture capitalist, if you will. You want to know that there's a real team, that they have a desire to create a working product, that they're actually really talented and smart. I think you want to look at how they've executed on their roadmap, if they've actually done things from the white paper. It's really common sense investing. There's probably 20 or 30 tokens in the top 100 that are actually worth looking at, and then I think maybe 95% of the others are really, put your finger in the air, right?
Yeah, I think it just comes down to due diligence. You want to kind of look very carefully at the tokens and the team and the platform, and figure what the platform looks like, what the technology looks like, and make your best decision.
Yeah, I guess the other thing is like I mentioned earlier, there's so many new products that are coming to market. I think people talk a lot about stable coins, or they talk about asset-backed coins, or like I mentioned, crypto lending, the potential of ETFs. There's so much innovation happening in just the actual financial product itself outside of cryptocurrency that it presents a lot of other opportunities besides just looking at token offerings, if that makes sense.
Right. And Robert, this question is kind of more for you, I think. As a lawyer in the space, what are your clients asking you right now? I mean, what are the questions that you're seeing the most of?
They probably would fall into two buckets. One bucket would be kind of the entrepreneurial side. They've got an idea, they've got a business, they've got a technology, they want to develop it, and they want to make sure they're able to do that. And how do they go about doing it in a compliant fashion? What rules and regulations do they have to comply with? So that would be kind of one bucket. The other bucket is, we probably have some kind of an issue. Maybe the SEC's contacted them, the CFTC, or some other, government agency, and basically, how do we respond? How do we try to handle that situation?
Yeah, I mean, the folks that work with me, like our head trader at our OTC desk, it really does all come down to compliance. The questions that he asked me is can we do this? And, from the OTC desk, we have to look at a lot of different things. We're looking at, what jurisdiction someone is in, whether or not we can trade with them, right? So if they're in New York, that opens us up to New York bit license stuff. So, probably not, we're not trading with New York residents. You get a lot of those different questions that come up every day, but it's all about compliance.
Right. And also, in terms of states, innovation is happening faster in different states. I mean, what are your thoughts on that? What's going on in Wyoming versus, California, for instance? Do you...
Yeah, I don't know if I have a take on that other than, San Francisco, LA, New York, parts of Texas, like here in Austin. I just think they have an ecosystem that's sort of, more developed to be able to spin out engineers and developers and folks who can contribute to projects.
Yeah, I mean, I think some of the states are being more proactive than other states, and I think that's great, but a lot of these issues are not just limited to a single state, and that's what makes it so tricky, is you really have to look at it from a federal level and a multi-state level. So even if you have, for example, Wyoming coming out and maybe defining, security or excluding a utility token or whatever the case may be, I mean, that might be great if you're in Wyoming, your investors in Wyoming, and everything is going on in Wyoming, but to the extent you get out of that space, you might have a whole set of separate issues, and especially with cryptocurrencies and the way these things operate and their international aspect, it's pretty tough to get, in a situation where you're dealing exclusively with one single state.
Right. Okay, so on that note, I think we're going to open it up for questions. So anyone who has a question, let's get that started. Is there a microphone on? Oh, thank you. Thanks.
This is fine. Hi, I'm Michael Turpin. I've spoken on this subject a few times. I'm not a lawyer, but I seem to spend most of my time consulting lawyers. I run Transform Group. We've done 110 ICOs, starting with Mastercoin and Ethereum and MadeSafe. And I guess the question for both of you is how it can be that Malta and Wyoming and many other jurisdictions seem to be able to find that there actually are utility tokens that don't act as securities, and the SEC won't say that there aren't. I think actually the fourth tenet of the Howey test is the most important one, the active efforts of others versus the appreciation of the asset. For example, wine futures are clearly not a security, whereas the Howey test was about oranges trying to be treated the same way and just giving a dividend. I think right now that this indecisiveness is driving great innovation out of the U.S. and into places like Malta. Thoughts?
And I think certainly with respect to kind of business leaving the United States and going to a place like Malta or other locations, I think that is happening. I mean, I hear about that. I am privy to it in my work as far as having, clients or potential clients that are looking at issues and deciding to go offshore. So there is no doubt about that. All we can do is kind of work with what we've got, at least at kind of my level. I suppose there might be other folks out there, lobbying efforts or something like that could be undertaken. But, as of right now, with respect to what the SEC has said, you've got that Munchie decision, and it's really kind of a fact-intensive analysis. They have taken a little bit of a step back, and this was in June of this year, actually, where the SEC did come out and put out some guidance about Bitcoin and Ethereum, which I thought was helpful, where they basically said, hey, look, those aren't, basically taking the position that they're not securities because of the decentralized nature. Yeah, so I would have to take a look at what it was, but the case in Munchie was interestingly enough, it was not a false statements, misrepresentation case. I believe they basically charged them with selling unregistered securities, and they only did a cease and desist order. I'm not even sure off the top of my head, I could be wrong about this, but either there was no penalty or a pretty small penalty because they basically unwound the ICO, but it was not hey, this white paper is full of false statements, misrepresentations, we're charging them with fraud. It was really just hey, you're selling unregistered securities, I believe.
Yeah, they actually were advertising this coin will increase in value in their material. So that's really what got them is in all the marketing. They were like,
absolutely.
Hey, this value is going to go up.
Right. So that's that kind of secondary market component a little bit, like that Dow investigative report where they talked about dividends. So if you get to that piece, and that is one of those things that if it's communicated to investors, that will signal to the SEC that this is a, investment.
Okay. So I have a question around how anybody, whether the U.S. or any government, plans to regulate totally autonomous, decentralized organizations and structures when there is no sort of centralized intermediary or anybody that's really pulling the levers when you have a code that's out there, open source, no one really manages it. I mean, I guess a small example could be Augur, in that a lot of what's going on in Augur with their prediction markets are totally illegal, but because of the way that Augur and Joey Krug and their team have structured the way they interact with the Augur protocol, that they don't touch any of the data, so they can't be legally liable for any sort of like assassination markets or what have you. So that's out there. It's spread almost like a germ, and there's no sort of central point of shutting off Augur. How does any regulatory body anticipate to regulate effectively totally autonomous, self-organizing, decentralized structures of whatever protocol it might be? How does any regulatory body plan to get a hands on that?
Yeah, I mean, I think that's a great question, and you're sort of alluding to it, right? I mean, it's a huge challenge. I guess the way that the government would go about it would be both at the individual level and then at the exchange level. So, to the extent that you are generating these coins or you're holding these coins and you want to liquidate them, well, the exchanges probably wouldn't be able to list them, right? So, I mean, the government would use other tools to attack it as opposed to like actually being able to directly influence the protocol.
Hi, I got a couple of seemingly unrelated questions. It's like a common thread in the discussion that there's not a lot. We would like to see more specific guidance from the regulators. And I recently read a statistic that the PwC study found that 48% of enterprises listed regulatory uncertainty as their main barrier to entry and development. So when we talk about Howie and how it's a 1946 case, how do you, as a counsel, as an attorney, when your client approaches you and says, okay, I want to list an ICO and I need a letter from you that my token is a utility and not as a security, how comfortable do you feel giving an answer based on what is out there already, which is the Howie test, which is some opinions and some reports, but not really any statute or precedent?
It obviously makes it very difficult, and it would be something that just, takes time, effort, and research, to make sure we understand the product, to make sure we understand, the token, how it's being generated, what the white paper says, what the communications have been with investors or purchasers in the past. These days, if there's a capital raise associated with an ICO, it's it's going to be very difficult, I think, to conclude that it's not going to be a securities offering. That's just kind of with the guidance that's out there. Certainly with the utility component, I guess one of the things with that utility component we'd want to look at would be, okay, is this the person that's buying the token, are they going to actually utilize the utility, or are they buying it to, hopefully get an increase in value down the road because maybe there's going to be a secondary market or something like that. So again, that would be kind of one of those fact-intensive analyses that we would undertake. We'd have to look and see what's been said about it. What's in the white paper? Are they talking about a secondary market? Are they talking about possible appreciation? Does the person that's going to buy this token actually have a real need for the utility or an interest in using the utility, or is it, well, that's really irrelevant, but I'm hoping it's going to go up in value. And the reason why we look at that is because that's kind of what the SEC is going to look at.
Thank you. And then the other question is, usually when we think about the utility versus security dichotomy, usually it's in the context of ICOs. But I know a lot of the cryptocurrencies, the source of inflation in the system are miners and people who mine. And when you mine, you create tokens. So what happens to a miner who then offers those tokens on what appears to be the secondary market, but it's really the first time these tokens is this an offering of securities? Should that miner then look into registering? What if there's thousands of miners who each offer like 1 Ethereum?
That's a tough question right there. Look, it's going to depend, I think, on, a variety of factors, but certainly a threshold question is the token that we're talking about a security that they're being issued in the mining process? So that would be a question, but, it'd be one of those things that it's a very fact-intensive analysis, and we'd have to kind of go through. But these are very probing questions and good questions, and that's kind of to your point, which is there's a lot of uncertainty in the market. There's a lot of questions about compliance. People want to do the right things, but, this type of question, we can't just, pull it up on, Google or call the SEC and they're going to give you a straight answer. It's going to be, well, it depends. So I guess maybe that's the straight answer. It depends.
Thank you.
Okay, I'm kind of new to the market. I had this kind of kicked up under my feet because of a project I've been working on for 10 or 12 years. And I'm looking at all of this concern and confusion. Look at Munchie. They were trying to collect several millions of dollars. Why would they take the risk of not going to through the regulatory processes and get registered and try to do this as a token? What is the value compared to the risk they just took? They were just shut down. What is the calculation that wants so many of the people in the space to avoid the SEC? Because I just went through the SEC codes. I have a methodology where I can turn it into a questionnaire and just walked right through the codes, and I looked at it, and this is not a problem. I didn't see anything that was a real problem. Oh, I got to file a couple of reports to the SEC, and the only issue I could see, I can't sell grandma who makes less than 100 grand a year and is retired, and I can't sell her more than 5% of her annual income. Well, big deal. Or if she makes more than 100 grand a year, I can't sell her more than 10% of her annual income. That's not even a consideration when I'm trying to raise millions. So what is the calculation? Why is this even such a consideration? I don't understand it.
Consideration being, whether to register with the SEC or not.
Yeah, why would I try to do a coin and hope that the SEC doesn't land on me like a ton of bricks when it's not that difficult to get through the securities?
I think it's a great question. I think, listen, it's an asset class that's still pretty nascent and professionalizing. And I would say, in their case, I can't speak to their mind state, but they probably just didn't even know that they needed to be honest with you. They've gotten bad advice from other investment advisors, and that's where they netted out. I'm not sure otherwise.
No, I think that's well said.
Well, here's a question, a more specific question. In terms of the Reg A Plus filing for crypto projects, so I'm not sure, are there any case so far as I know, that none of the cases been successfully gone through the process, got the approval. Is that right?
I have not come across a Reg A company. I have seen a couple companies that were doing Reg S, I believe, but I haven't seen a Reg A.
I'm not aware of one either. I think they're in the works, but I haven't seen one executed yet.
Okay, thank you.
I just wanted to make a couple of comments, and I don't want to take away from your time because I'm actually doing another another session right after this, which will be sort of an open mic on legal issues as well. You just made, I guess the question was raised to you earlier about which of the regulators have the most influence, and I guess I would just ask, maybe to reconsider that a little bit. If we're talking ICOs, yes, CFT or SEC and CFTC, but when we're talking about greater impact on cryptocurrencies more generally, looking at FinCEN and its pronouncements, looking at state regulators and so on, that it's a much broader regulatory pie that we're talking about. IRS, it all depends. It's a multitude. On Munchie, just one other note about that case. It was very interesting because I believe the founder of Munchie was a woman. It was probably the cleanest, as you said. Nothing bad happened in that case, or other than representation of future profit. My read of it was that this was one that was low-hanging fruit for the SEC to move very quickly on and get some pronouncements out to give guidance to the industry. So I'm wondering if you'd had any kind of reaction like that to the case.
Yeah, I think that's exactly right. As I mentioned, I believe it was just a simple sale of unregistered securities. They caught it midstream and essentially, shut it down.
Cool. So we are out of time. Thank you, everyone, for joining us.
Thanks.
And enjoy the rest of the conference. Thank you.
Thanks.